Good afternoon. It's 2 p.m. Central African time. Thank you for choosing to tune in to Eswatini TV's Market View, the Tuesday edition. This afternoon, we want to look at what has been happening in the kingdom over the past week, where Eswatini's economy has been under the spotlight in two distinct ways. On the ground, the Mavuso Trade and Exhibition Center was buzzing with energy as the International Trade Fair drew corporates, local entrepreneurs, as well as international organizations into space, exhibiting, networking and exploring fresh opportunities. The fair has long been positioned not just as a showcase but as a platform to attract investment as well as to open new corridors for trade. At the same time, the central bank has released its July-August statistical report, offering us a more technical reading of the economy. The numbers reveal a fascinating duality: private sector credit easing slightly month on month, yet on the other side, climbing over 8% year-on-year to 21.5 billion in Malangeni. Business credit tells us a similar story, contracting on short term, but growing more than 14% when compared to the last year. What's particularly striking is the divergence between large corporates, where credit fell, and SMEs, which saw a modest rise. So, taken together, these two developments, the vibrancy of the trade fair as well as the nuanced shifts in credit growth, they raise critical questions about where Eswatini's economy is headed, how investment is being mobilized, how businesses are adapting, and how resilient the private sector remains. So to start us off, we'll look at the outcomes of the trade fair as well as its contribution to this broader economic picture. Joining us will be Siphesihle Nkabinza, the Manager of Domestic Trade at the Eswatini Investment Promotion Authority. And then later on, we'll be joined by Business Eswatini's Chief Executive, Mr. E. Nati Dlamini. He's going to unpack what the credit numbers mean for the business community. Credit numbers, of course, released by the central banks. We just gave you a premise there of what our show looks like today. But let's kick things off by looking at our business news today. Central Bank of Eswatini encourages businesses and Eswatini to consider investing in treasury bills and government bonds as a safe and effective way to grow their savings while contributing to the national development. The bank, through debt capital markets analyst Valencia Dlamini, who highlights the benefits of investing in government securities and outlines the simple steps that are required to participate.
The Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.sz. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Let's start at apologizing for that technical glitch with our first story, but let's proceed. We did highlight when we introed our program today that we want to talk all things the trade fair. So last week, the Mavuso Trade and Exhibition Center in Manzini was a hive of activity with corporate companies, local businesses, as well as international organizations, all of them showcasing their products and sharing information. The event formed part of a broader effort to promote trade and investment in the Kingdom of Eswatini. To discuss the outcomes of the trade fair as well as its impact on the economy, we're now joined by the Manager of Domestic Trade, Siphesihle Nkabinza. Thank you for making time. Well done, first and foremost. Congratulations on yet another successful one. My first question is, when you strategize and you map out your goals and aspirations, before everything, the lights go up and then the curtains fall when you're done. What are your aspirations? What are your goals? What do you go out to the boardroom saying, this is what success will look like for us?
Yeah. Thank you for having me, Mr. Mumala. We're done with the 10 days of the trade fair, right. And we are very much happy that our objectives were met. Our key objectives were to have a number of foreign companies participating in the trade fair. Mm-hmm. Number two is to see the influx of people, visitors, basically. Remember that we have exhibitors who've paid large sums of money to be part of the trade fair. So it's our obligation as the organizers of the trade fair to ensure that we get that footage for them. We ensure that we get that participation from the public and also potential customers or even their customers to be at the trade fair. Prior to the start of the trade fair, we started with the regional exposure of the trade fair. We introduced the trade fair to Nhlangano, Simunye, and the Madlang and BC. Our main aim was to ensure that let's sensitize the public of the upcoming event so that we can ensure that we deliver on our application to ensure that footage is there in terms of visitors being at the trade fair. In terms of foreign exhibitors, we're very much happy on that front because we did have a fair number or above the number that we had set for ourselves, which is above 10% from what we had last year. We had a number of companies from South Africa. We had a number of SMEs from Lesotho. Then we had about 6 companies from Taiwan and one newcomer, which was a company from Turkey. So I think we had a very good reflection in terms of international exhibitors. Then on the other fronts, seminars, we held our seminars from the 1st of September to the Friday, the 5th of September. So in terms of participation from the audience, our facilities were full. We remember that we had two areas where we conducted seminars. It was the F&B Business Chamber, and the other one it's Mavuso Business Center. So we had full participation in terms of audience, and the speakers were there and delivering information relevant to digital transformation at their front. So I think we were very much pleased to have a number of local companies interested in delivering around digital transformation. So then from our entertainment, because we also promote that artisan part of things, entertainment, even the business side of the sports, we had sponsorship from 8Bet and also Mola Sport, taking the issues of bringing the talent to our trade fair in terms of hosting the football competition, volleyball competition, basketball and netball, and also showcasing our cultural activities. So we had a fair competitions. Teams were very much happy in what transpired during at their sporting fronts or even their entertainment front. Local artists' participation, it was very much reflective of what we are eager to see as the organizers of the trade fair, ensuring that we have more local artists participating or exposed at the trade fair, other than having a large number of artists from neighboring countries. So this year we had a very, very good reflection of that, including the Wafa Wafa dance competition. So I think we will gauge ourselves to have worked fruitfully in hosting the trade fair this year.
100%. Taking from everything that you're saying, foreign exhibitors, 10% growth compared to last year. Local companies exhibiting at the most optimal and utmost level, full capacities across all the pavilions. Exactly what we mean when we say a hive of activity. But the crux of it all, I suppose, becomes the trade and investment opportunities that you want to achieve from this. Perhaps as a parting shot, a quick answer. Would you say outcomes in practice, there were any clear investment commitments or partnerships or trade deals that came out of this year's event?
Let me start by looking at the trade fair.
Sure.
You know, when we're hosting the trade fair, we try to measure all the results from before the trade fair happens until the end, or even after the trade fair. We have seen a number of local contractors being employed by our exhibitors at the trade fair, of which tens of millions have been in circulation in terms of providing services and delivering on what their exhibitors are looking for. So on that front, I will say we are very much happy to contribute to the economy of Eswatini by bringing in that platform for trade and investment in a smaller scale. Yeah. Then for looking at the bigger picture as to companies setting up in the country, definitely we arrange business-to-business meetings during the trade fair, especially for the foreign companies that are joining us for the 10-day period. We are happy that we are expecting positive results, because most of these companies, when they come into Eswatini, they are looking to find if the business climate is conducive for them to spread their wings into the kingdom. Remember that we are one of the luckiest countries in Southern Africa, which is party to a number of markets, especially here in Africa. We explore SAC, we explore COMESA, we are exploring the SADC and also the AFCFTA. So most companies, they view Eswatini as a springboard to the African market. So hence their participation and having them being using the trade fair as a springboard to explore the African market. Yeah.
Mr. Ngabiza, thank you for your time. He's the manager of trade at domestic trade at the Eswatini Investment Promotion Authority. We are talking all things the trade fair. We go back to the story that we started with. The Central Bank of Eswatini encourages businesses and Emaswati to consider investing in treasury bills and government bonds as a safe as well as effective way to grow their savings while contributing to the national development and the bank. Through debt capital markets, analyst Valencia Dlamini, who highlights the benefits of investing in government securities and outlines the simple steps that are required to participate. Let's listen.
With the treasury bills, the short-term securities, we have 3, 6, 9, and 12 months. The interest rate, it fluctuates, but for the past year, it's been ranging from 8 to 9.2%. And then with the treasury bonds, we have 3, 5, 7, and 10 years. We have a fixed interest rate for that one. For the 3-year, we are offering 10.5% this year. And then for the 5 years, we are offering 11%. And then for the 7-year bond, we're offering 11.5%. And then for the 10-year bond, we're offering 12%. The minimum that you can invest is usually 10,000 for bond actually, but with the treasury bill, it has to be multiples of 10,000, which can be 10,000, 20 going upwards. And then with the bond, it's from 10,000 or in multiples of 1,000, either 11, 13 going upwards. With the application process, with the treasury bill, you can come directly to the Central Bank of Eswatini at any point in time. They're always available. But with the bond, you strictly use your commercial bank. Anyone is eligible to apply, individuals, companies, you're all eligible to apply.
Economist Sanele Sibiya shares why it is important for businesses in Emaswati to invest in government bonds.
When you are looking at the history of our treasury bills and our treasury bonds, is that you would always earn above inflation in terms of the return on investment. So in real terms, your money would have been preserved. So as a money preservation fund, I do advise Emaswati to go and invest in those, because you ensure that you've protected your money against inflation, and you also gain a bit of a premium because they're always above the inflation rate in terms of the interest rate.
The president of the Business Federation of Eswatini, Thulisile Dladla, also emphasizes that bonds represent a stable and reliable source of investment for businesses.
It would be an opportunity for our business people. For instance, if you have a project that you would need to fund in 3 months' time, whilst you await the completion of the project, you can put the money aside in the treasury bills. Why I say so is because As alluded to by the central bank, they are a government institution, and the risk, I think it's well mitigated.
The International Monetary Fund states that investing in local currency government bonds is important for individuals, businesses, and government to avoid exchange rate risk, reduce reliance on foreign borrowing, and build deeper domestic financial markets, which can improve overall financial stability and support economic growth. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Mbabane.
All right, we go straight into our Enterprise Watch segment now, where we'll look at more developments from the Central Bank of Eswatini. We'll be in conversation with Business Eswatini's Chief Executive, Inati Dlamini.
Let's go move. He was.
Right, welcome back. The central bank, once again, has released its latest monthly statistical report for July-August this year, revealing rather notable shifts in private sector credit. Credit extended to the private sector declined slightly by 0.6%, that is month on month, and yet it registered a year-on-year increase of 8.1%, closing at 21.5 billion emalangeni, that is as of July 2025. Business credit dropped by 0.6% compared to the previous month, but grew significantly by 14.3% over the year, reaching 11.6 billion emalangeni. Let's understand what all of these figures as well as their implications are for the business sector. Business Eswatini Chief Executive Inati Dlamini joins us now via our video link, our Zoom video link. Thank you for your time, Mr. Dlamini. Always appreciate talking to you on such developments. This is an interesting one. Perhaps let's start with the big picture. Month-on-month declines often grab headlines, but the year-on-year growth seems to tell a more encouraging story. How do you, as Business Eswatini, reconcile these two readings?
Okay, first of all, thank you for having me on. Much appreciated. It's good to see you again. Firstly, month-on-month figures can be quite volatile. They can change quite frequently. But as you say, you're looking at the past few months as a linear period, and you see a very, very nice and healthy growth that's taking place. So that's good. Some of the monthly figures can really be quite big. The volatility can go up and down. So you shouldn't worry about them at all. We're not worried about them, but all we're looking is that there's a very good, healthy credit extension going on right here.
Let's look at the business sentiment, because we are seeing a 14% rise in business credit year on year, which suggests companies were far more active in seeking finance. Do you read this as a sign of greater confidence in the economy, or are firms simply borrowing to survive in a tougher climate?
No, in fact, you are really spot on. We will love it when we see this happening. Every time we see credit extension rise and credit extension to the private sector in particular rising, we say, oh, I think we're good here. Firstly, because they got the credit because they qualify. Secondly, because they got the credit because they have what you call bankable projects. Those are the projects that we want. And we have seen a very nice increase in credit extension, particularly in the past 1.5 years. And it tells us, and it's correct, that the economy is rebounding very nicely. Projects are being financed by banks, and they qualify for that kind of finance packages. And it can mean even a lot of things. That means people are getting hired out there. So it's not a bad thing every time you see credit extension going up, especially to the private sector. But you may want to worry when you see it going to the sort of consumer sector. But that's probably a subject for another day.
Yeah, 100%. Shifts now between big corporates and SMEs. Large enterprises pulled back on borrowing while SMEs gained ground. Is this a signal maybe of SMEs becoming a more important engine of growth, or is it more perhaps a reflection of risk aversion on the part of lenders toward larger firms?
Okay, it's almost customary that you would find most of the credit extension going to the private sector, going to larger businesses, in large part because they have a much stronger track record, that they have a stronger financials, etc. And it then trickles down as you go to the smaller businesses. There's no argument, and we've always stated this publicly. In fact, in every economy around the world, small to medium-sized businesses are the engine for economic growth because there's just so many and well diversified, some of them in our communities, and we can only ignore them to our own peril, really. But we cannot also deny the challenges that come with smaller projects. The risk areas that are there when in terms of financing, and some of the things that the PE were closely looking at in terms of how we assist our small businesses, of which we have a plethora of them right here and our roof here at BE, so many of them. But yes, most of it will go to sort of bigger exporting companies, the private credit extension that we're all talking about.
The real economy test, beyond the balance sheets, do we have evidence that this credit expansion is translating into tangible outcomes? New job investments, job creation, very important, and sectoral growth? Or is it still largely propping up working capital and short-term liquidity? How do you chime into that?
I'm glad that you asked that. And I like the way you actually framed it. And you are spot on, because you can see sometimes this huge credit extension and you say, but show me the beef here. And I say, I've got nothing to show. One, I will tell you, the GDP forecasts for this country, 25 to 2026, they're just extremely ambitious. You ask government, especially the Minister of Finance, they will be quoting, say, hey, we're expecting 7.9 to 8.3% GDP growth. I mean, these are massive, massive figures. People say, no, you are crazy. That's just too much. You cannot. In fact, the World Bank has come back to say, look, they are probably achievable, they are attainable, but we think at 5.5%, you can hit 5.5%. Guess what? If we were to hit 5.5%, we'll probably be the second largest economy within SADC. That's how good a 5.5% GDP growth is. But the question is, as you are asking rightly, tell me, how can we see the benefits of that GDP growth? For instance, does it create the right employment opportunities, if you ask? And let me hold on that one. I will answer you later. All I know is it expands the private sector in ways that it is beneficial. You can even hold me to this. Previous years, we have grown the economy without creating the commensurate number of jobs that are expected. Because if we have a 36% unemployment rate in this country, generally speaking, and we have 58% unemployment, youth unemployment, you need to grow the economy at the very least by over 10% a year. It's almost nearly impossible. All I know is all the GDP growth that we're achieving, they are helping alleviate the unemployment situation. To what extent? Maybe not to the extent that we all wish for. But generally, you'll be seeing this year, and you're already seeing the construction projects that are going up everywhere. The expansions in Matsapa that are happening. It's literally visible, and the cranes that are going up everywhere. All of that is feeding to our GDP. If nothing changes, all things being equal, it will likely to have a very good year, 25, 26, if nothing changes, everything remains equal.
I've got my answer. The credit expansion is indeed translating into tangible outcomes, perhaps not as a single individual may, hope for in his most optimistic sense. But let's also look at the reserves and the stability, because the reserves, as articulated by this report, they fell by just over 1% month to month, but they're significantly stronger when compared to last year. Now, from a business perspective, how important is this buffer, and what signals does it send about macroeconomic stability as well as investor confidence?
Yeah, it's very, very important. Reserves are very, very, very important, especially if you are a net importing country. Now, there is a gold standard around the world that you must always keep at the very least 3 months of foreign reserve. That's the barest minimum that is expected of any country. What does it mean? I can tell you, viewers who happen not imagine a situation where you're saying nothing of foreign currency comes into this country, which means you have got nothing, but you still need to buy your fuel, which is denominated in US dollars. You still need to import your fertilizer from Ukraine, US dollars. You still need to buy machinery, US dollars. How long can the country survive? Those are reserves. He says from a foreign exchange point of view, we can survive for 3 months, which is the barest minimum. Which is why every time it falls slightly below 3 months, we say, what is happening? Who is spending the money? Where is it going? And I'm about to tell you, there have been some months we've been worried in the past few months, where it's actually fallen sometimes to 2 months. Do you know where the money goes? It's not like people are taking their foreign currency out of the country. If you look into that, and then you go look at the figures for import and export, you always find that there was what you call an import deficit. I think I'm mixing it up. When you end up importing more than you are exporting, if you import more, what are you using to pay for those imports? Is foreign currency. Foreign currency. And we've seen it going down at the time we have a current account deficit. But in many, many months, we've been enjoying what you call a current account surplus, which means we've been exporting more than we've been importing. And now it's sort of rebounded again to 2.9 months, almost 3 months, and we hope it goes even further above that. But it means us exporting more so that we get more foreign exchange into the country to create that buffer. It's important to businesses, especially the ones who import and export, the ones who have to buy machinery from overseas, because they need to use US dollars. And where do they get their US dollars? From the reserves. So, but for now, I think we're good. We're good. Generally, we're good.
Exactly. Thank you so much for your time. Really appreciate your time. You were right. I suppose it is called the export deficit, what you are referring to. But we really appreciate your insights. Those were really illuminating insights that you have shared with us. That was Business Eswatini's Chief Executive, Inati Dlamini. Thank you for staying with us. This has been the Tuesday edition of Market View.
Thank you very much.
Enjoy the rest of your day. Bye-bye.